Hello and welcome to today's Friday edition of FXTimes Daily Market Recap. I'm your fundamental market analyst, Nick Nassad. Today is Friday, April 9th. The main event in today's trading was a rally in the euro-dollar pair, as we had news that a deal was reached between Eurozone deputy finance ministers and senior central bankers in regards to some kind of aid package that could be announced this weekend. That allayed fears of sovereign debt risk and drove yield spreads on Greek government bonds lower. The big question is at what rate will the IMF and the EU countries offer loans to Greece, as right now market rates demand around 7% for a 10-year Greek bond. A report from Medley Global Advisors stated that funding would be provided to Greece at rates well below those prevailing in the markets, which would be a benefit for Greece in order for it to fill its budget hole and also to refinance a lot of the debt that's coming to maturity in the next 2 months. In the currency markets, those that sold the euro-dollar pair were short covering on the news while they awaited confirmation from official sources over the weekend. Here's a look at the euro-dollar pair for this week. We saw a decline from around 1.36 down to below 1.33 as we had growing pressure on Greece and as Greek bond spreads widened. However, in today's trading, we pushed above this old support level from Wednesday around 1.3350, and in overnight trading we saw the European session a climb to 134. Following a slight counter rally, we had another second surge in New York trading as we had some further confirmation of some deal in the works, perhaps as soon as this weekend. The rally today reached a Fibonacci retracement level of 61.8%, where it stalled below the 1.35 level. Our highs today also coincided with this neckline from the head and shoulders pattern that we had seen coming into this week. Right, so we had this left shoulder, our head, and a right shoulder from which we fell, but now we retest that neckline, our old support, as resistance. So we could see that the market was unable to sustain the move above this 1.3470 area. So we'll have to see how traders digest the aid package details following the weekend as we open next week's trading. In the pound-dollar pair this week, we had been trading between this 1.53 level of resistance and support at 1.5150. But in today's session, we saw a break of this resistance level as we pushed above 1.53 in the European trading session. We reached the 1.5390 level, and that was our resistance for today. The catalyst for this increase here was a very strong producer inflation reading from the UK. If we zoom out, we see that today's high also corresponded with our highs from March 17th. And before that, we had seen the pound slide rather sharply from 1.58 down to 1.48. So if this move above 1.53 can be sustained, we do have several levels that we could reach, including 1.55 and at the height 1.58 as potential targets. Producer prices for the month of March in the UK climbed more than expected as the March monthly reading rose 0.9%, much higher than 0.4% predicted. That was the biggest jump since May of 2008. On the year, output prices were up 5%, also higher than the 4.4% forecast and the 4.2% we had seen in February. The reason for the big increase was we have seen rising commodity prices during the month, as well as a weaker sterling, which makes raw imports more expensive. With inflation at the government's upper limit of 3% in February, the report suggests that consumer prices may stay volatile as the economy emerges from recession. This week, the USD Canadian dollar pair hit parity and dipped below parity for part of this week's trading, but we're going to end the week trading around 1.0050. In today's session, we saw the greenback gain against the Canadian dollar following a softer than expected Canadian jobs report, so that gave the Canadian dollar some weakness. But overall, we have seen a very sharp decline here as we move from 1.03 down to the parity level since March 26th, and it seems that we're in a bit of a consolidation, sideways trading with our resistance at 1.01. We see that when we tagged that level in Thursday's session, we fell rather sharply, though those losses were made up in today's trading. Still, the underlying fundamentals of Canada is strong as the economy is recovering, and there our expectations that the Bank of Canada will have to raise rates by June or July. With this pair, it's also always important to keep an eye on oil prices. The job report for the month of March in Canada saw that the economy gained 17.9 thousand jobs, which was smaller than the level in February and also smaller than the around 26,000 expected by economists. The unemployment rate remained at 8.2%. There had been some rumors in yesterday's trading that the figure would be stronger than expected, and so this may have come as a bigger disappointment than the overall headline figure suggests. In a look at the Australian dollar, US dollar for this week, we had a rally early on in the week as we had the Reserve Bank of Australia increase interest rates, but we came up against this resistance at 0.93, and that resistance held up until today's session, where we bounced off our 50-period moving average in overnight trading and then rallied higher than 0.93 and even retested it as support until we hit a high at 0.9341. That was actually a new high for 2010. The increase in the Aussie today coincided with some risk appetite in US equities and a jump in gold prices to 1,164. Here we take a look at gold prices and we see that this week, starting at 1,124, we've moved almost $40 and to hit a high at 1,164.70. So we had this surge on Tuesday, Wednesday, and Friday in gold prices. If we look back at the Aussie, we see that on Wednesday when gold was rallying, we hit this resistance at 0.93, and so there was perhaps from a fundamental perspective some pressure for the Aussie to move higher to follow gold. So that breakthrough finally came as we moved above 0.93 in European trading. Another commodity currency, the New Zealand dollar US dollar pair, also surged in today's session, rallying about 100 pips from its low at near 0.7060. Zooming this pair out, we had some interesting technical developments, as first we broke above a downward sloping resistance trend line here, and then we moved above a horizontal level of resistance at 0.7125. So you could see that first we accelerated our rally, we stalled at that horizontal resistance, but then broke through it in New York trading. So the Kiwi, Aussie, all behaving rather strongly as a result of higher gold prices. Our final pair for today is the USD Japanese Yen pair, and we saw that the pair had rallied starting in yesterday's session after testing this 92.85 level, which had been resistance in late March, but then we broke above last week. After testing this resistance, we rallied until we hit a downward sloping resistance trend line at 93.75, from which the pair slid again. So what's important to monitor is what happens to price action as we come toward the convergence of this support and resistance trend lines. If we look at the 10-year Treasury yield, U.S. Treasury yield, we see that we declined from Monday as the government sold $8 billion in inflation index debt on Monday, and that was followed by 3-year and 10-year notes as well as a 30-year bond auction yesterday. So the demand was rather okay for the auctions, and that made yield prices come down throughout most of the week, though we did see a rally on Thursday. If we look at the dollar-yen pair, we see how closely the dollar-yen pair has been following U.S. Treasury yields. With our main market highlights out of the way, let's take a look at some key releases that will be coming out next week. In the US, on Tuesday, we will get data on trade balance. On Wednesday, and we get figures on retail sales and consumer prices. Thursday, we get industrial production, the Philly Fed Index, and the Empire Manufacturing Index, 3 measures of the manufacturing sector. And Friday, we get data on housing starts as well as consumer sentiment. So a rather jam-packed schedule for U.S. fundamental data. Around the world, on Sunday, we get Australian home loans, and Monday, we get Canadian housing starts. So we'll see how the housing sectors are doing in those two countries. Tuesday, we get the UK trade balance as well as the Canadian trade balance, and New Zealand retail sales. Wednesday, we get Chinese consumer inflation and GDP data, and on Thursday, we get the Eurozone trade balance. And that will do it for our coverage of the Forex market for this week. For more news, videos, and analysis, please visit our site fxtimes.com. I want to thank you for watching and wish you a great weekend.